interest, some people often ask me, how is that average length calculated? The right-hand edge of your chart, you see the average length of the cycle. How is that average length calculated? Well, in fact, the average length is calculated on the basis that Hurst himself used to calculate those average lengths. Hurst, in the 1970s, used charts that had 180 bars. Whether they were daily charts or weekly charts or indeed monthly charts. And he counted the number of cycles on those 180 bars and calculated the average on that basis. So in fact, Sentient Trader does exactly the same thing. It looks back 180 bars on the shorter cycles that you can count and measure on a daily chart, and it averages those cycles. Okay, so even though I have data on this particular chart going all the way back to 2004, I think. There's an odd aberration in the data, as you can see, in 2003, which I have excluded from the analysis because it would have skewed our analysis quite a lot. So I've excluded it, and this data I downloaded from Yahoo Finance as a matter of interest, and freely available data, and so I excluded that aberration in the data from the analysis. And so Sentient Trader isn't looking all the way back to the year 2005 to calculate the average length of the 40-day cycle. The 40-day cycle, we know, constantly experiences variations, but we're not interested in the length of that 40-day cycle 7 years ago. Okay, it's simply not of any interest to us. However, the most recent length of the 40-day cycle is of interest to us, and Sentient Trader calculates that for us. Now, the next expected trough of the 18-month cycle is a better guide, I believe, for when we expect the 54-month cycle to be forming a trough. And as soon as the 40-week cycle, which the market is approaching at the moment, comes in, and we have reason to believe that the 40-week cycle has been formed, then we can measure, we can project forward from that 40-week cycle and get an even more accurate estimation of when that cycle, of when the major 4.5-year cycle trough is likely to occur. And it looks to me as though it's probably going to be occurring more towards the end of 2012 instead of the beginning of 2013. And I know you might think that's motivated by reading Mayan prophecies and so on, but it's not. It's based purely on the analysis performed in this chart. Okay, gosh, I've been talking for a really long time and I haven't said anything yet. So let's take a look at the shape of the cycle, my favorite topic. As you can see, and as you know, because I've spoken about it before, when cycles are playing out very nicely in the market, I find that they tend to follow those semicircles when you form the when you zoom the chart to the right scale. And as you can see, the market followed this semicircle. The price level, you'll remember I've said, is of absolutely no meaning, but it followed this 54-month semicircle. It followed it very nicely right up until September of 2010, and then of course the market broke away from it and dropped way below that semicircle. That, I believe, is something that often happens on a very significant event. What was that significant event? Potentially, I believe that was in fact the peak of the 4.5-year cycle. I see a question from somebody called S, which is very mysterious. Hi, David. Is that applicable to all cycle analysis, 180 bars? Saul, okay. The 180, using the 180 bars for the measurement. I'm not sure whether you mean it's applicable to all different forms of cycle analysis, or whether you mean it's applicable to all cycles in this analysis. Presumably all cycles in this analysis. No, it's not applicable to all cycles in this analysis. Hurst used to, or he specified in his cycles course, that the longest cycle that you can meaningfully analyze or identify with a 180 bar daily chart is the 80-day cycle. Potentially you could position a 20-week cycle in there. The average length of the 20-week cycle is 136 days. So if you're looking at a 180 bar chart, and in fact let's zoom in here and have a look at 180 days. Let's see. Let's just zoom in here. Let's turn off our semicircles. This is a median line chart because I don't have detailed data on this particular market. So 180 days, as you can see, is back to here. So Hurst's charts used to look a little bit like that. His daily charts used to look a little bit like that. And the longest cycle that you can meaningfully position on the end of day chart is the 80-day cycle. So in fact, what Sentient Trader does is it goes back 180 bars for the 40-day cycle, and as you can see, we have had 1, 2, 3 instances of the 40-day cycle in the past 180 days. So the average length of that 40-day cycle is calculated using the last 3, and I think, if I remember correctly, it squeezes in the extra. It squeezes in the extra 1 over there. So in fact, it will go back 4 cycles of the 80-day cycle, and of the 40-day cycle, the 80-day cycle, because you can only really accurately position it if you're looking at a weekly chart. Of course, nowadays with Sentient Trader, you can simply zoom in and out on your chart, so the same thing doesn't really apply. But the 80-day cycle, Sentient Trader will go back 6 iterations of the 80-day cycle, and 6 iterations of the 20-week cycle, and all longer cycles if it can. Okay, so I hope that answers that question. So let's go back to our rather grim picture of the 54-month cycle. This is a very bearish cycle. I wanted to speak for a moment about the shape of the cycle, and there we go. There we go. That's a good sort of a scaling for that. Now the scaling of the discussion, as you know, on the shape of the cycles, all has to do with underlying trend. If you have an underlying trend, which is the net result of all the longer cycles, if you have an underlying trend which is negative, then you would expect a bearish cycle shape to manifest itself, and this is certainly a very bearish cycle shape. What are the 2 very simple clues that we use for determining the cycle shape? The first is the peak of the cycle, which presently is here in September of 2009. Do we know that that is certainly the peak of the cycle? Yes, we do, because price has crossed the relevant FLDs and VTLs, and I will demonstrate that to you in a moment. So that is the peak of the 54-month cycle, which means we're not going to see any higher prices than that before the end of this year. But that's not a terribly exciting prophecy. I don't think many people are expecting to see higher prices than the 24,000 level in the Italian market before the end of this year. But it implies similarly that we're unlikely to see higher prices in the Australian market, or indeed even in the US markets, because most of those markets have started folding over and are heading down towards their troughs of the longer cycles. What's the other thing that we use to define a bearish cycle? Well, the other thing that we use is the position of the price at the end of the cycle, and we expect that price in a bearish cycle to be lower than the price at which it started. Now, the price at which it started was somewhere over here, and in a moment we can have a look and see in the software exactly what it was, but we're expecting lower prices than that. As you can see, the Italian market's pretty much there already, so that's again not really a terribly dramatic prophecy. But what I'm going to do in a moment is take a look at the Australian market and see whether we're going to expect lower prices in the Australian market or not. Okay, so if I zoom in a little bit and let's take a look at the that low price, you can see that low price on Friday the 6th of March was 13,447, and if I put my mouse there, 13, and let's just increase the scale. There we go. That price level was at about 12,300 level. So the price has got a little bit further to go downwards. So we're expecting price to go a little further coming in towards the end of this year. Let's take a look at what's happened in the most recent 18-month cycle, because that's of particular interest in connection with the Australian market, which we're going to look at a moment. And here is the 18-month cycle. Now, of course, this is the third 18-month cycle, so we would expect this 18-month cycle to be fairly bearish coming into the end of this year and early next year. What we're actually seeing at the moment, the zoom I have it at the moment, is the 40 is the, let me click that and close that, is the 40-week cycle. There is the 40-week cycle, and so the 40-week cycle, as you can see, is exhibiting a fairly good and clean cycle shape. It's looking a little bit like a capital M. I keep speaking about the capital M, although I've cheated in drawing that, because as you can see, the 20-week cycle trough occurred over there. So it is a slightly skewed cycle shape, and I haven't been entirely honest in drawing that cycle shape. Potentially, in fact, the true cycle shape should be a little bit more like this. Probably rising up to that peak and then coming down to a trough over there, and then coming up to there and then coming down again. What is that cycle shape? Well, we have two peaks that are very much equal. I don't even need to put my mouse there. You can just see it visually. You've got very equal peaks on this current 40-day cycle. And so do we expect prices to be lower or above by the time the cycle turns up? And the answer to that is, of course, that we expect it to be roughly equal, because this shape has so far, the cycle shape has so far manifested as a very neutral shaped cycle. Okay? Does that make sense with what we expect? Well, this is the 40-week cycle that we're looking at here. The next longer cycle from the 40-week cycle is the 18-month cycle. The 18-month cycle formed a trough, according to this analysis, in the last week of September 2011. And so over this period, the 18-month cycle has been heading up. Okay? Because it's heading up, and it's going to come down to its final trough towards the end of this year or early next year. So the 18-month cycle is giving us a positive impetus, a bullish impetus, pushing the markets up. The next longer cycle is the 54-month cycle. And the 54-month cycle, I don't need to zoom out and show you. The 54-month cycle, we all know, has turned down and is heading down. So therefore, the 54-month cycle is negative, giving us a -1. Therefore, the cycle shape, and generally cycle shapes are formed by only the two cycles longer than the cycle that you're considering. The cycle shape, when you add up those two, is -1 plus 1 is equal to 0. So therefore, it's a neutral cycle shape. So in fact, what's been happening in the Italian market, although when I have coffee in the bar down the road every morning on my way to work, everybody tut-tuts and says, "Che casino, what a mess the markets are," and everybody's been terribly disappointed about the Italian markets. But in fact, using Hurst cyclic principles, the cycle shape that has played out since September of last year is exactly the cycle shape that we would have expected